Tuesday, May 6th, 2025. Hope you're having a great week. Before we dive on into this, do me a favor, hit the like button, subscribe to the channel if you get any value from this content. But otherwise, let's go ahead and dive on into this. This first chart is an interesting one. It's compelling. Why is it compelling? Well, I mean, look at it. Comparing the current Bitcoin, quote, bear market, end quote, to the previous ones. Is this a bear market is the question, because a lot of people are calling this a bear market. Now, of course, we could look at altcoins, and altcoins would tell a different story. But with Bitcoin, what we're seeing is from the day of the peak, this is every time, 2021, 2013, 2017, from the day of the peak, the price where Bitcoin was at percentage-wise was much lower than where it is now. Now, I'm not paying attention also all that much to like the arrow that we're seeing here. That doesn't necessarily mean that we're going to rally automatically to new all-time highs, but you can see in comparison to previous bear markets, quote unquote bear markets, we are much higher as a percentage from the drawdown from the peak. That is a chart worth keeping note of, that there's a significant deviation. And what would this communicate? This would communicate, one, potentially that we are not in a bear market, that we will hit new all-time highs, or two, that what we have going on right now is it's just a different environment. I mean, this is the effect of ETFs being present. This is the effect of strategic reserves happening, you know? And so this is one of those things that you look at it and maybe we are in a new era where Bitcoin is not going to have these 85% drawdowns from the peak. You know, you can cross fingers, we'll see. But something worth paying attention to. We will see. I am still of the mindset that Bitcoin will get to $30,000 or so, or maybe even lower in the bear market. But as of right now, we'll see. Another thing, okay, so pay attention to this chart. What do we have here from Dark Frost? Bitcoin network activity remains in a bear market. Now, difference between Bitcoin price and Bitcoin network activity. You can see network activity is drawn down significantly from its peak. When was the peak? The peak was kind of close to the peak of Bitcoin's price at the end of 2024. So since December 2024, the network activity index has been dropping sharply. This indicates a clear lack of transaction activity and a decline in daily active addresses. It also suggests decreasing demand for block space, as shown by the drop in the number of UTXOs. This kind of pattern is typical during bear markets or during specific events like the China ban that occurred in June 2021. And that's actually what I want to draw your attention to, is look at network activity during that first peak in 2021 and then look at it during the second peak. And we were in significantly a lower level of network activity. We were in a network activity bear phase when Bitcoin hit a new all-time high in November of 2021. And my speculation, I'm sorry, I wouldn't say I'm sorry to say this, is I do believe that we're going to hit a new all-time high in 2025, and that it's not going to be much higher than its previous all-time high, just like what we saw in 2021, you know, a little bit higher of peak during a quote-unquote bear market for network activity. That's something that we're going to see, maybe Bitcoin in the 110s, 120s, something like that. And this chart would kind of support that mentality that we've already sort of reached a peak of excitement when it comes to Bitcoin network activity, and we are in a bear phase with network activity. That does not necessarily mean that we are now, from this point, going down and dumping to lower prices. So whatever we have in front of us, I'm not expecting insane levels of excitement, but I would not be surprised if we hit a new all-time high. So anyway, moving on, something very interesting to me. This is, if you ever scroll on X and you see people talking about Bitcoin power law, there's this kind of pissing war going on right now between a few people who are claiming that they are the OGs, that they're the ones who discovered power law. And you look at power law, or you look at things like stock to flow, and it can get you very excited about Bitcoin and where it's going, because Bitcoin, worst case scenario, by the end of 2025 or something like that, is supposed to be at $150,000, $200,000. I actually don't pay enough attention to power law to tell you what that's going to be, according to their minimum estimates. But we have here, this is a post from the Bitcoin forum in 2013. Wait, 2013? No, 2011, excuse me. So let's read this from Cena here. We have been lied to about who first found the power law relationship. User Jim618 on Bitcoin Talk first noted this relationship in 2011, not 2013. I noticed today that the current distribution of Bitcoins obeys a power law. If you draw it on a big log graph, then you get a nice straight line. So Jim discovered it. Grumpavani simply claimed the credit. Let me open this image in a new tab, and so we can zoom in and see this. Sorry, I'm a little bit under the weather right now, but Jim618. Hello, everybody. I noticed today that the current distribution of Bitcoin obeys a power law. If you draw it on a log graph, then you get a nice straight line with a bit of whimsy. I've extrapolated what this graph will look like in a year from now, 2012, and in 2 years of time, 2013, to predict the future price of Bitcoin. Here is the distribution of Bitcoin I use initially. So we have 1x, 10x, 100x, yada, yada, yada. But here's the price. The price is here. July 2011, Bitcoin at $20. July 2012, Bitcoin at $100. July 2013, Bitcoin at $1,000. And that's actually very close to what it actually was. So Bitcoin peaked at $1,300 in November of 2013. That was that 2013 peak. So July of 2013 was much lower. That was kind of a gully, a mini bear market. But by the end of the year, yeah, Bitcoin was over $1,000. That's really interesting. And then you can see this is this original power law model laid out by Jim618. So you compare this to something like the stock to flow, and this one has followed along very well to this original power law model. So where would this put us in 2030? That would put us around $500,000 for Bitcoin, something like that. I'm pretty sure, because, it's not a chart that I can actually analyze. It's just I'm making a rough guesstimate. If you can see where my mouse is, that's $100,000. And so where would we be January 2030? We'd probably be around halfway between that line and a line that's not even on this chart. So really interesting. This is if I'm going to pay attention to any power law model, I'm going to pay attention to Jim618's power law and not the power laws that we're seeing float around X as of right now. So moving on, excuse me. Raoul Pal just stunned Dubai with a jaw-dropping statement. Now, listen, I'm not entirely aligned with Raoul Pal right now. I think he's off, but I wanted to read the statement just for some context, for some perspective on things. So Raoul Pal just stunned Dubai with a jaw-dropping statement. Demographics is everything and debt is going out of control. His keynote will blow your mind. Markets are screaming doom, war, recession, collapse, but behind the headlines is the most explosive macro setup of our lifetimes. Raoul GMI calls it the banana zone. Here's what it means. So we're looking at liquidity again, which would have us at $140,000 Bitcoin in July of 2025. Again, all right, I've made multiple videos talking about this idea that we should not get sucked into Bitcoin hitting $140,000 in July, that at some point we are most likely going to deviate from this. But if the masses are dreaming of Bitcoin at $140,000 of July, we have plenty of opportunity for them to be our exit liquidity. Just keep that in mind. But let's see, Raoul's framework equals the everything code. It all boils down to one word: liquidity. Every major asset class from Bitcoin to the NASDAQ follows global liquidity like clockwork. More like 83% like clockwork, and then it does until it doesn't. So why does it matter? Because total liquidity explains 90% of Bitcoin's price action, 97%, it's more like 83%, like I said, 97% of the NASDAQ's moves. Ignore the noise, follow the money, keep it simple. There's a hidden tax on all of us, 8% currency debasement, plus 3% global inflation equals 11% wealth erosion yearly. If you're not earning more than 11% a year, you're getting poorer by definition. I actually do agree with that. Millennials can't afford homes. They can't afford assets. So what do? They go full risk curve. They buy crypto. Why? Well, because it's the only shot they have of escaping the trap. And that's why Bitcoin has returned 130% per year since 2012, despite 70% pullbacks from time to time every cycle, outperforming the NASDAQ by 99.94%. There has never been an asset like this ever. We're going to be a lot more correlated to the NASDAQ over time. So what is the banana zone? Here we go, Raul Pal. We'll see about this. Where was that? I don't know. What is the banana zone? Let me go back here. Breakout, phase 1 breakout, phase 2 correction, phase 3 mania. We are now entering phase 3. I'm telling you guys, I disagree. But I hope I'm wrong. Let me be wrong. If I'm wrong, honestly, I'll be set for life. But alt season is coming. It's not hopium, it's macro. Alt season, my commentary here, alt season will come when interest rates are lower and when the money printer is turned on. I know I've said that a million times. I'm just saying it again. And we are still several months away from that, maybe even more than a year away from that. It's not hopium, it's macro. As the business cycle accelerates, people move out on the risk curve. Small caps, junk bonds, Rolexes, blah, 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 altcoins. Same trade, same driver, liquidity. There's a plot twist to this story that makes things even better. Retail has been buying. Oh, geez, remember this has happened before. Institutions still on the sidelines. Sentiment is at record bearish levels. It's like 2020 or 2009 again. The lesson, max fear equals max opportunity. This cycle mirrors 2017. For Bitcoin, yeah. For altcoins, not so much. But with more liquidity, more adoption, and more macro tailwinds, the everything code shows the breakout. Will Bitcoin hit 850,000? My goodness. Maybe not, but 250 to 450 is plausible based on these models. And alts, some may 20x, just like in 2017. We're still there. I'm done with this. We are still there. Oh, man. And what's it going to look like? Just entertain me for a second. What's it going to look like for people who are posting stuff like this if I end up being right, or if there's other people who are of the same mindset, if we end up being right and we get to the end of 2025 and it's not anything like this? Where are they going to go? I think they're going to despair and they're going to give up, and then we're going to have a phenomenal buying opportunity. But we'll see. Again, I hope they're right. I hope it's very predictable, very easy. And it's just like that forever, where the year after the halving, November of the year after the halving, or December of the year after halving, every time we have this big mania blow off top. Sure, that sounds great, but I don't think so. Another thing I want to focus on here. So we have seen a lot of comparisons between 1998 and today. I've shown you a lot of charts comparing the Dow Jones 1998 to today. And we are correlating with it very well. I will agree with that. And again, this is another one. I hope this is how it plays itself out. 1998, big blow off top, and then it was over instead of it being over right now, you know. But here's a comparison. We've also been tracking along with 2008 very well. And in 2008, you know, we put in a series of lower highs, but then we had a lot lower to go, and we bottomed out in March of 2009. So is this 2008? I hope not. Is it 1998? I very much hope so. As of right now, I'm leaning towards 2008 in the stock market with a perspective that we can hit a new all-time high with Bitcoin. But we'll have to see. Just keep in mind that there are multiple comparisons here, 1998, 2008, and we'll see where we go from here. But, okay. I did not intend on showing this, but hey, this is interesting, right? If you invested $10,000 in the S&P 500 10 years ago, you'd have $31,950 today. 20 years ago, $71,000. 30 years ago, $188,000. 40 years ago, $744,000. And 50 years ago, good luck getting your hands on $10,000 50 years ago, but you would have $2.5 million today. Compounding is magic. Start as early as you can. That does outpace inflation. Just something to keep in mind. You know, if you do the same thing with your random junk coins, probably not. But Bitcoin's your best bet, and then some altcoins. So as of right now, Bitcoin's at 93,643. We're having a pullback. Not too surprising. We were very much overextended. Let's see a reset in stochastic. Let's see a higher low form in the RSI, and then we'll see where we go from here. I do have a limit order set at $91,878. Would be pretty happy if that filled. Would be perfectly fine if we didn't even get that low. But Camino is trending on coinmarketcap.com along with Trump Coin and Gork. Thank you, Elon Musk. And Fartcoin is still up there. Fantastic. So Bitcoin 93.6, Ethereum a little under $1,800, XRP 213, BNB 596, Solana 143. My mindset right now is I do want to buy the dip. Really, that's about it. I'm interested in buying the dip. So we'll see where we go from here. Still a long way off for altcoins. Sui's holding up pretty strong, $3.40. A lot of interest in that still. But anyway, that is all I have for today. I hope you have a wonderful day, a wonderful rest of your week, and I will most certainly be seeing you in another video. Peace.